Hello, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great session, and happy Monday to you. Hope you guys all had a great weekend. Actually, we're gonna get started with the analysis here in just a second. Let me just make sure. Just making sure everybody's can log in here. Sorry, guys. Okay. Oops. Dang it. Sorry, guys. One last thing. There we go. Okay. So obviously equities are starting off on a strong footing. We're up right now. The dollar's weaker. We've seen the euro above 119. Cable actually just, I think the rally might actually be done here, but for near term intraday. But this dollar weakness that we're seeing, the dollar weakness that we're seeing, I don't expect it to last today. I actually think the dollar is going to firm up here. We should, if it's not today, it is tomorrow. These extremes should abate. So I do believe that, like I said, today or tomorrow, we're going to have the sentiment start to switch a little bit, and you're going to probably see a little bit of profit taking. So the question is, are we going to see some profit taking midday today in equities, or at the open, or maybe it might even be tomorrow? But I think we got to watch. I'm interested to see the open today. Okay. The euro, it's back at the 38% retracement. I'm going to go ahead and knock out some support and resistance levels on the euro right now. But think about that. Equities are higher. The euro is just back at this little high from last week. I don't anticipate us going too much further than what you're seeing right here. But what can happen, and I think is more doable right now, maybe make this a different color, is this. Yeah. So resistance may come in around 119.40, I would say. I'm going to write down a couple levels too. So 119.40 or 119.73, the 50%, 75. I'll just write down 119.75. And we're just going to stay in range. Well, no. I take that back. We stay in bearish. We're going to stay in a bearish trend. While the euro trades below this level, we have to stay bearish, in my opinion. Okay. That previous support should act as current resistance anywhere up here, right? So let's just imagine equities make another surge higher. They could. And if they do, it's going to drag the euro up with it. So I think any move from, like that 119.40 to 119.80, it's going to be a place that you want to look to sell some euros, in my opinion, right? Okay. Support though, intraday, while we're above 118.60, it's looking kind of constructive. So 118.60. Okay. All right. Cable. So all right. So we have a lot of support down here at 136.63 in the cable. Obviously, we've rallied pretty aggressively from there. The question is where, and that this is a double bottom that's developing. So I'm going to write down 136.60. So the question is, where's resistance intraday? And like I said, I think the cable is probably pretty close to running its course for the day on the upside. the 38% retracement currently is where we're at, but that means that this spike 137.75, if we take that out, then you have to look at the 50% holding. So what I would think is if the cable makes another surge higher, you want to sell into that strength, which will be 137 or 138 basically. Okay. Remember, we're going to stay in range while we're above that support. Ozzy. If you guys are in the chat room, you know I sold a little bit of Ozzy this morning, and I think while we're below 76.75, what is that? Yeah, while we're below 76.75, that's going to be an asterisk. You have to stay bearish. Support down here at 75.30, but really intraday 75.90. Okay. Kiwi. Kiwi can't get above this 38% retracement. Even if it does, though, you got to sell it. You have to be a seller at 71 cents. I actually, here, let me put in, I'm going to put an alarm here, because if we got to 71 cents, I would sell. There's no doubt in my mind. Like, I would be a seller right there. Okay. I just don't know if we're going to get up there. So right now, 70.70 is resistance. Then you got 71 cents. You have to stay bearish while you're below 71 cents. Stocks hit all-time highs. Kiwi can't get out of its own way. Same with the Aussie. Support right now is 70 cents. Then below 70 cents is 69, 69.40. So okay, Looney. Strong employment data on Friday pushed us below the support, but I guess that's not relevant because we've been above and around that that level. So this is probably more relevant, right? So that means support's going to be pretty key here at 125.20. Resistance is all the way back up at 126. So we're going to stay range bound. Sorry, just my eyes are watering. Excuse me. Oh my goodness. Dollar Swiss. Support 90. Remember, we've been writing down 92. That's going to be really big support. I mean, it's huge, right? This has to hold this 92.10. And even if it breaks, that's not, I don't look at it. I don't look at that as being necessarily bearish for the dollar as a whole. Just remember, this is going to be more, this currency pair is more yield sensitive. So resistance, $92.85. I'm just going to write that down for now because you know what? screw that. Sorry. I'm going to go all the way up to the 38% retracement around here. Previous highs over here. That's if this low even holds. This is not set in stone yet because we might, make new lows, right? So for now, though, it's going to be around here, no spike highs. So I'm going to write down resistance as being basically 93 cents for now. It's not great resistance. It's just, it's going to be resistance, I think, on any rally. US dollar, Norwegian krona. So Norway trading a little heavier this morning, probably because crude oil's up. Crude oil spiked back above 60. Why? I have no idea. Whatever. 844 is probably pretty good support here. Resistance. I mean, we got swatted down overnight around the 853 level. It's just kind of range bound right now. But don't forget that it's holding up really well with stocks being at all-time highs. That hasn't changed. Dollar MEX, little inverted head and shoulder pattern trying to develop here, but really we have to get above this 825. Actually, previous support's 827. I'll just write down that number. 20, what did I say? 827? 2027. I don't know what I'm talking about. Oh, I'm still talking Norway terms. Support here being 20. Okay, and I'm going to keep us in range. We're at the 127% extension. That's holding for now. I know we've been writing down 2007 or whatever from last week, but I don't want to write that down because we're on it. So I've got to go out to the 78% retracement, which is, basically 20. Just in case we punch into new lows, you got to be ready for it. So that's where the next support is. Or, you can write 20 or, 1999. Okay. All right. Dollar yen. 109 continues to hold. 110 is resistance. We have to stay bullish while we're above 109. I know it feels weird because as far down as we've come, but this has to stand bullish. And you notice I'm not keeping the Swissy in bullish right now because it came off pretty aggressively. I mean, you could, but in this 109, this is key. This is critical support. Dollar index trying to make its way out of this channel. I guess we can probably do that. Anyway, support is the 618, basically what we're on, and that comes at 92. Resistance be at 92.50. Range. Stelios, Steve, how you guys doing?
I'm very well. How are you?
Good. I'm just about ready to wrap this up, and because how many people were pretty bullish gold here? Hold on, real quick.
Bing, 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 bing.
Yeah. You can hear that with my microphone?
Yep.
This microphone's a pretty good noise cancellation microphone, but I guess those dings really stick. Okay. But what I was going to say is gold's really holding here. but a lot of people are expecting this double bottom to really play out. So that's and notice how well we held that 1760 last week. I mean, it held like a champ.
Yeah.
So I do, and I am very much a believer, is if we break 109 in the dollar yen, 1760 will be broken in gold. Then you can look for a big bounce going the other direction. But while we're still holding that, you got to be real careful. I'm not in the gold is going to rally camp yet. 1730, I'm going to write down a couple levels. 1700 and 1730 are support. Let's go over to silver. Same as last week. I mean, I'm not even dealing with it. I know you will, Stel, but not me. 2680, and I'm going to keep that in range. Bitcoin, we have to just look at the all-time highs because we are above 60,000. But see that, I know we talked about that on the FACE webinar, but I still care about 62,000 and now 56,000. So 56K, 62K, and this is bullish. And then the S&P, I'm going to wrap this up with 41.45. And the reason why I'm going to write down that number is because it is a major resistance for the S&P. Here we go. It's that 161% extension. Oh, I'm sorry. It's 41.51. I don't know why I was thinking 45.45. So 41.50. And you have to stay bullish while we're above 40.60. Okay. So there you go. Hey, Stelios, I have to feed my dogs. They are like scratching at my door. So I'm gonna let you take Steve, Stelios. I'm gonna let you guys take over. Good morning, Steve. And
good morning, mate.
All right, I'll catch you guys a little bit later. I'll see the rest of you guys on the daily roundup. So thanks, everybody.
Thank you, mate.
Thank you. Let me just upload the chart, the bias chart, and put it onto the chat room, and we're good to go. Okay, done. So, Steve, you want to take the screen, or how do you want to do it?
Absolutely.
Okay. So, a couple of things to mention before we get going, which I didn't get a chance to mention on FACE. First of all, I was reading the U.S. Treasury's going to sell $370 billion in treasuries in the next 3 weeks. It's the highest monthly issuance ever.
How much? How many did you say, Stale?
370 billion.
Yeah. This is just the beginning. If you remember, I kept warning for quite some time that, this year there's going to be a massive inflation of the balance sheet. I believe we can hit 10 trillion by the end of the year.
And think about it. Rates are still at extremely low levels. Why not take advantage and issue? I mean, Apple's doing it, right? Why not?
Yeah, it's not exactly the same, as you know.
I know.
But I know that some people that hear it perhaps don't understand the massive difference between the two,
Yeah.
Because there is like a massive difference between the two.
Well, Apple is sitting on billions and billions of cash. And
to begin with, Apple, yes, first of all, has billions and billions of cash. Second of all, Apple has a positive net worth. I mean, deeply positive net worth, opposite from the US government, or as a matter of fact, for the vast majority of governments.
And the positive cash flow every year.
Yeah.
Right?
Yeah, exactly. Plus, Apple decides what to do with investors' money, not with taxpayers' money. And the difference is one and huge. In one case, they take your money without even asking you. In the other case, you voluntarily give it because you believe they're going to handle them, properly.
Yeah. Yes, it's a big difference. And so that's an interesting stat. The other thing that happened over the weekend on Sunday, I think Jerome Powell had an interview on 60 Minutes, and he was actually quite I don't want to say hawkish, but he was quite upbeat, and he said that the outlook has brightened substantially.
Okay.
He's still saying that he's not worried about inflation, that is transitory, but he was quite quite bullish overall. And he also spoke about a potential digital dollar and how it could work, and how a digital currency could work, and how it's in the mind of
In the same
US
way the
policy
non-digital one
makers.
does.
Yeah, exactly. And funnily enough, I'm reading he's talking about digital currencies. Yes, let's buy cryptos. Well, it's not the same thing. It's like fiat, but only digital. It's not.
Yeah.
Anyway,
in that sense, it is the same thing, because it's not that any of the actual digital currencies are backed by something, so they're fiat as well.
Yeah, but a digital dollar would be exactly the same as the regular dollar. Only we just wouldn't have notes in your hands.
Exactly.
But anyway, so that was what Powell said overall, and he was relatively bullish and sounded quite upbeat.
Why not?
Yeah. Also, we're talking about cryptos now. I don't know if you saw Ripple. Put up XRP USD, you'll see they had this issue with the SEC, and
they did.
They won. So, or basically they resolved it. So it's just flying. And I have one of my good friends who had been long for the past week saying, "Look, he's gonna pass," and he did. So well done, guys. I told him, well done for gambling really well.
Yeah.
And,
the issue, if I remember well, was that they were accused by the SEC that this is it's an investment in essence and not a digital token, because the company itself was issuing that or something like that. So
yeah. Anyway, so the cryptos is definitely still going well, and you see the other ones now, like I don't know, Litecoin and Dogecoin and all that. All the altcoins are starting to perform.
Yeah.
So
there's a name for all those, you know it.
Yeah, I'm not going to say it.
Yeah.
Anyway, the saying the SEC was saying it was a security.
Yeah, security. Yeah, exactly.
Yeah. Otherwise, a small grind higher in equities again, and dollar grinding lower. I agree with Blake, though. I think we will see a leg where the dollar is gonna bounce, and I think metals are gonna go lower. Even though I'm long, I think they're gonna go a little bit lower, and I'm looking to add.
Yeah. Gold and silver down on Friday, down today, although nothing major.
Only a little bit, yeah.
Yeah. There is, the technical picture is still a little bit confusing here. I mean, there is no way to know if the correction lower is over, not yet. So, there is still the possibility that, there is another low before we can see a continuation higher.
Absolutely.
But on the other hand, there is no certainty that that's the case. So, if you're looking, to get them as a long-term investment, I wouldn't blame anybody for starting to scale in, despite the possibility of seeing, a lower low. My general thesis hasn't changed at all. I think it's a matter of time before we see another big leg higher for all precious metals. So, I think that's more or less inevitable. The question is, when does that start, and what exactly is the trigger? I'm assuming that the trigger is going to be the huge expansion of the Fed's balance sheet in combination with the fact that at some point the market is going to be persuaded that the Fed is indeed not looking or not willing to hike rates anytime soon. So I assume the next leg lower in real rates is going to be the trigger. What else did we have, Stelio? I'm assuming that doorbell got him. Okay, SEC was saying it was securities. Yes, correct. So we already have questions about some of the metals, specifically platinum. Here is platinum. Now listen, there is the possibility that platinum is trying to pull a silver, meaning we had silver here at a bigger scale, of course, right? We had a nice channel lower, we broke above it, but then we didn't get an impulsive move higher, which showed that this is still part of a larger correction. So, similarly to that, but at a different time scale, there is a chance, despite breaking higher from this channel, that platinum might have a more complex correction to unfold here. It's not unlikely, right? Having said that, as long as it trades above this broken channel, there is the possibility that we're going to see a continuation higher. But if that's not the case, my general thesis hasn't changed. I believe that platinum has already turned higher, decisively turned higher. So we're just going to need to monitor further to see what kind of a corrective formation we have, so we can be more timely in calling a bottom and a continuation to the upside. That's all I have to say about it. Now, having to do with palladium, holding up very nicely. Very likely that we've already broken out. It's not the break above the trend line, it's the impulsive manner with which we did that. Similarly, I think that the recent price action is clearly corrective in nature. So, I think that the path of least resistance is obviously higher. Now, what was the other question? Copper. Yeah, copper. Listen, we were monitoring this triangle, right? We broke above it, but we've had no follow through. So, exactly as we were saying with platinum before, there is a chance that there is a more complex correction about to unfold here. So keep that in mind. We'll have to, reassess if that's the case. The triangle might be something like this, right? So the triangle's resistance might be a little bit different. Who knows? Fact remains, though, that undoubtedly the price action following that high is not impulsive in any way lower, meaning I don't see any reason why somebody would want to turn bearish. In essence, we worked out the overbought conditions and we're correcting in time more than in price. So I think that copper remains very well bid, and sooner rather than later should continue its path higher. Yeah, it is testing the 50 DMA as well, since you mentioned it. Yes. Although I'm not a very big believer in moving averages as support resistance. If any of them is somewhat important, I would say it's the 200 daily moving average. Other than that, I'm using more as a fast one, the 51, and the slow one, the 200 DMA, to gauge, momentum, whenever they diverge a lot, or whenever, we have crosses, etc. Or whenever they converge a lot, which shows that there is no trend whatsoever. When you have like both of them being more or less horizontal and close to each other, it's an obvious indication there is no trend whatsoever. But yes, it's also this triangle's trend line support also confluences with the 50 DMA as we speak. So what else? Now, listen, I will repeat what I've been saying. I still don't see any major reason why I would be bullish the dollar. We've had a rebound in the dollar, there's no question about it. The manner with which it has rebounded so far is corrective in nature, and you see that it's a very weak kind of reaction. I find it impossible for the dollar to keep rallying as long as equities remain well bid. So, if you want to see the dollar rebound further, you need to get risk off. So far, there is no indication of anything like that happening. Now, somebody can refer to the S&P and note that the S&P is approaching the confluence of the 161.8% extension of the COVID sell-off, right? This move lower. At the same time, this ascending wedge is trend line resistance, both passing from roughly 41.50. But that's one factor to take into account. But we need to first see some kind of a major reaction before we can, start talking about bearish implications. Because for the time being, it's just a confluence of resistances and nothing more than that. It's going to be important if the market renders it important. If the market shows that it has some importance. Now, until that happens, I just look at it as a potential level for a reaction. So yes, it is an area I'm closely watching, but it doesn't tell me anything more than that. We might as well see a parabolic move higher. The last leg of some kind of a parabolic extension, as we've seen in frothy markets. We might break through this. We might break through this wedge and actually go vertical before we can finally correct lower. Who knows? I mean, we've seen that happen in the past. Because if you isolate the rest of the charts, I mean, if you look at the euro, for example, right, or if you look at the cable, here it is, or if you look at the Ozzy. So far, all these charts show me corrective consolidations. I mean, technically speaking, the chances of a break higher, so another leg lower in the dollar, looks more likely than anything else. So I can't possibly turn bullish the dollar unless I see some big risk off coming in the market. Wood, you mean lumber? Lumber futures, I don't even remember. What is the, anybody remembers? Is it this? Yeah, lumber has gone vertical, right? No inflation. Just look at this move in lumber. Yeah, I bet we've surpassed already any extension. Yeah, that matters. Yeah. So yeah, anything that has, as we've said, intrinsic value is just, skyrocketing. Some of them already did it and are consolidating. Some of them are doing it as we speak. Let me see. Whoop, sorry. No such a ticker. Yeah, there's no such a ticker, mate. In any case, we do have, by the way, rebound today in crude oil. Blake mentioned it. Yes, sorry, in the previous webinar. Now, we don't really know why. What I can tell you is that I'm still looking at this as a likely consolidation before another leg lower. I don't know if this is a channel or if this is a triangle. That might be the case as well. Here it is, right? But technically speaking, I think that crude oil has a good chance of producing another move lower before continuing higher. AMCX, yeah, sure. What is it? Let me see. AMCX. Let's see what it is. Amc Networks. Okay. Nasty move lower. Nasty move lower and an even nastier consolidation here. I mean, doesn't even want a rebound.
AMC was the one that was being traded by the Reddit people, right? Same as GameStop.
Yeah, lower. Yeah, look lower. This is a very nasty move lower, and the fact that we haven't managed to rebound, I think there's more downside here. The IWM, the Russell, yeah, sure, absolutely. Heavier than the rest of the indices. Earlier in the year, it was overperforming. Now it seems to be underperforming. So we haven't, the other indices have produced like a higher high. The Russell has not. In any case, somebody can't really make an argument that it's bearish. But what's this trend line support? If we break through it, somebody can even make the argument that then that's going to be a head and shoulders formation, right? But as long as we're not trading below it, let's say 210, as long as we trade above 210, yeah, I mean it remains bullish. But clearly, there are indices that are doing better. So, if you want to see relative strength, you probably want to go elsewhere. CO2 emissions. Yes, we've had a look at them in the past. Yeah, that's quite probably on another chart than this one. Let's see. Yeah, this one. So last time we had a look at them, we were obviously there. I said this looked like a very nice, pennant for a break higher. We did get that. So, we're higher. Now, there are a few problems here. One, clearly momentum is slowing down, right? That's one. Second of all, we're clearly overdone. So, what can you do here? Can you actually short this? No, because it's still clearly in an uptrend, right? But on the other hand, can you really be, long? I mean, should you be buying here? No, I don't think so. I don't think that's a very good idea. So, you want to be buying this probably because, it's a very, very nice bullish trend, but you want to do it at better prices. So inevitably you need to wait for a deeper correction lower. I would guess like back towards 31 or so. That's what I think about this chart. Yeah, my pleasure. Sugar. Stelio, do we know any ticker for sugar? Sugar. Okay, this is most likely a CFD for sugar. Let's see. Yeah, there it is.
Yeah, and you've seen it before.
Yeah, and I've seen it before. Look at this. It played out perfectly. So last time we were here, I said probably test the channel, then higher. We came a little bit lower. We didn't actually test the channel. We went higher. But look at this rejection and this nice move lower. The question is it over? Not really easy to say. I would say 0.16 is a nice area of resistance. So, not certain. We might see more weakness before we go higher, right? What's this 0.16 as likely resistance? If we break above it, we might have seen the low. Until that happens, we seem to be finally having a decent correction lower. I don't think, it's necessarily the case that it's over yet. So, yeah, I wouldn't be buying as we speak. Perhaps above this confluence of resistances up there, we can. So let's discuss this again when we revisit that. Thoughts on JPY crosses? Yes. Listen, the USD yen, because obviously, that's the main driver, right? I mean, whatever the USD yen is doing is heavily influencing the rest, has been following my template like perfectly. I mean, we drew this a long time ago. Look at this. And it has been more or less following this template perfectly. So, I have no reason to go against my template. So, since it has been working like a charm, I mean, it's like I drew it, post event. I think we might see more weakness in the short term before we see higher prices. And the last 3 daily candlesticks, are showing me a consolidation, given the fact that we've seen a move lower before that. We might see more weakness first before we can see higher prices. So I would say in the very short term, the chances are tilted more for seeing more weakness, which of course would influence the rest of the yen pairs lower. But I think there is a good chance that we've seen a very decent breakout, which means that another leg lower probably will get us to very attractive levels to be long again USD yen. So that's my short-term thesis and my more medium-term thesis. That's what I think about it. Okay, that answers Jason's question. Anything else, guys, girls? Anything else in your radar that you want us to cover? Yield. Sorry, wrong place here. Now, there is a big question I have here. Not that you can answer it. Time will answer it. Is this the triangle or is this the triangle? And it makes a whole lot of difference because in this case, you should expect one more leg higher at least. In the other case, we can just go straight lower from there. So what's these two trend lines for the next move of the market? Most likely this is the triangle. So I would guess the next move is higher if we break through this trend line resistance. So if we break through like 67, let's say, I think we should see an extension. Until that happens, of course, the risk reward would favor more shorts than longs, but above 67, I think we're extending higher. So do you have anything that's piquing your interest at that moment besides the metals? This is a very bad market if you ask me. So there is nothing that I'm imminently about to trade. The only thing I wanted to trade, and I'm still looking on a daily basis, and I've already decided I'm going to trade is this one, GDX, GDXJ, and the silver miners. So I want to gain some exposure in silver and the silver miners. These are my next targets, but I can't really do that until we break higher or until we break lower in some kind of exhaustive manner, in which case I would be more than happy to buy if the market is panicking, you know what I mean? So I would either buy higher if we're breaking through this, in my opinion, corrective correction, actually, more than consolidation, or lower if the market just like collapses through the channel, and I'm pretty sure that everything is going to be bearish then. Everyone is going to be like, oh yeah, that means we've seen the high in gold, we've seen the high in silver, they're going much, much lower, blah, 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 blah. That's also an area and a time that I want to be long. I want to be buying them. So, but my time horizon is more of a medium to long term. I was more of a shorter term trader than I currently am, but the market conditions have forced me to be more longer term than I used to be, right? Because I think that these markets are really bad for trading them for like a few days, because usually my trades lasted for a few days on average, right? But this is a market that it's either made for scalpers or people that have a longer time horizon. For intermediate time frames, in my opinion, this is a very, very bad market to trade. At least that's how I'm experiencing it myself. So since I'm totally not the type of guy that would ever do scalping, right? I've done that only in my very, very first year I ever traded. And I decided, that's not for me. I don't want to be living that type of a life because, if you're a scalper, it's like, much more intensive. And it's a lot more stressful because, of course, if you want to be scalping, you need to use high leverage as well, right? So I decided that I'm going to be more intermediate. But as I said, this market has forced me to be even more longer term because, it's a really bad market. Yeah, so that's what I'm looking for. It's really amazing to see the type of patience you and still have.
You should meet our wives, basically.
Yeah, exactly. First of all, that's that's a true story. Second of all, I don't see it as some kind of a big accomplishment. I just see it as as a result of having been burned several times and then teaching yourself a lesson, and then you're trying something else and it works, and when you see it works, then it's a reinforcement, and then it becomes a natural way of viewing the market and trading. So then you don't even think about it. I mean, it's not that I really have to pressure myself or put some real effort to do it. I mean, it comes effortless to to trade in that way, because it gives me peace of mind, which is I mean, I wouldn't trade that with anything in the world. You know what I mean? I lived years with waking up in the middle of the night, grabbing my phone, looking at where the markets are, because I had like open positions with higher leverage, that I wanted to hold shorter term, then sleeping again with half sleeping again, an hour post that, doing the same. Or if we had, let's say, back in the day when the JPY was moving a lot more, because the the Japanese situation was a lot more volatile, and we had like some kind of an announcement which would be in the middle of the night for European hours. I would have to put an alarm clock and wake up, like, let's say, at 2-3 in the morning. Trust me, I'm not missing any of that. Yeah. Okay, guys. So
Okay.
thank you all. We'll be back tomorrow with the next morning edge. Thanks, Phil.
Thank you, Steve. Thank you, everybody.
Bye.
Bye-bye.